Daniel, thanks very much for joining us. There's been a big focus on ESG, well-being, as well as the environmental side, also the social side. I suppose, what's the position there at Primonial? What's the strategy, both in terms of, I suppose, Primonial itself, but also the strategy in terms of investment?
If I begin with the strategy in terms of investment, our view is that today investing in ESG is actually investing in the future liquidity of our assets and the future capital gains of our assets. So to me, extra financial performance and financial performance are getting quite aligned in the current context. The current context is that from a regulatory point of view, there's really been let's say a tipping point in 2020 when with the SFDR regulation, with the décret tertiaire in France, with all kind with the taxonomy and all kinds of regulatory frameworks. Typically, investors are now making ESG a part of their mainstream due diligence, and therefore we believe it is going to show in the values, in the prices, and our strategy is to prepare for that. So in terms of how we manage our assets, our approach is clearly best in progress, which means we don't believe in systematically building new developments, new offices. And by the way, from an environmental point of view, it would be a mistake because, as you may know, 60% of the carbon is produced at the construction phase. So building new office buildings is not necessarily the answer to the carbon issue. The answer is to improve the existing stock of our assets, and there's plenty of actions that can be taken on the isolation of the building, of course, on the source of energy, but there's of course it's a case by case action plans. We believe what we can do best is pricing all those capex, capital expenditures, which are not necessarily capital expenditures, by the way. They can be just processes. They can be just, just by having conversations systematically with your tenants, you can show them that they're having the lights on after 10 o'clock at night, that they're heating up in the summer, and just by the behavior of your tenants, you're going to gain about 10 to 15% of energy consumption. So it's a whole global management system that we've set up, and our strategy is to deliver. We don't believe in net zero carbon in 2050 only because we have to account for what we're doing until 2030, because our holding period of our assets is typically 5 to 10 years, so it would be too easy to commit to a 2050 goal. So we believe in fixing some annual objectives and having really a progress approach to our assets, not an exclusion policy that would exclude some assets. We believe in really improving the stock, and that's how we're going to reach the targets we have.
And do you think there's a risk of stranded assets, particularly looking at the French market, Daniel?
Yeah, absolutely. There's some assets. So these, we have an exclusion policy, of course, because what I call stranded assets is assets we will never be able to put on a 1.5 degree trajectory, because that's actually the issue, putting buildings on a trajectory, right? Some assets cannot be renovated enough to be on that trajectory. So yeah, I would say that on the 50 million square meter stock of offices in Paris Île-de-France region, for example, to me there's about 5 to 10 million square meters which is stranded effectively, with very high vacancy rates, so very secondary market, very far from any transportation, etc. So Of course, one solution is to convert them into residential, but that only can be opportunistic. And yeah, clearly there is a stranded market, and today in France there is not the flow of capital from very opportunistic investors, typically from the US, who have a buy it, fix it, sell it approach. That's very rare in the French context, which is dominated by investors who have a more defensive approach of assets. So that's why really we have the policy of not buying stranded assets in the first place and improving the existing assets.
Really great to get your insights on that. Thanks very much, Daniel.
Thanks for having me.